collapsed last summer, and we will have much higher oil prices, much higher gasoline prices, and certainly a much bigger inflation problem, not just in the United States, but around the world. So I don't think that it was just about politics. The main problem now is that you are fighting the flow of barrels from OPEC with a finite stock, which is what's left on the SPR. And it's not a lot left. Can the White House order further releases from the SPR over the next few months? Yes, it can. But there is not a lot, and certainly they're not going to be as large as they were through this year in 2022.
Javier Blas, Anne-Marie, to the two of you, thank you. Brian Weinstein, I want your thoughts on this. I'm not going to ask for your view on the strategic midterm reserve, but I will ask for your view on the energy market and what it means for your call going forward from here.
Yeah, listen, there's so many uncertainties out there, and that's one of them. And obviously, Europe is a mess. The situation in Russia is going to be with us for a while. And so you end up in a world where it makes the Fed's job impossible. It's going to slow growth. It's going to cause the consumer to feel like inflation is going up no matter what the Fed does. And it's going to slow growth, I think, right? Input costs are going to go up, and I'm not sure you can keep passing them on. So it makes me like, again, that longer-term fixed income stuff a little bit more. But it also makes me worried the Fed is going to have to raise rates more, or at least stay stickier to convince people that inflation, that prices aren't going to go up ad infinitum. It's really a difficult place for the Fed to be, and energy makes it that much more complicated.
Jeff Curry of Goldman have said a few times over the last 12 months, this is the revenge of the old economy. Laurie, that we had zero interest rates for so long that everyone chased long duration assets. They invested a ton of money in things like Peloton, food delivery apps, car services, Uber, all of the above, and we didn't invest in digging holes in the ground and mining after the bust of China 10 years ago. Laurie, with that in mind, I think people might be hesitant tactically to invest in the energy names going into an economic downturn. Talk to me about the structural story and the tailwind that might persist through next year and beyond.
Well, look, I think that, in terms of we're not able to drill enough, right? We have these shortages there. I absolutely agree with Curry's assessment. And I think, we're hearing about this kind of revenge of the old economy, not just on the energy and materials complex, but we also hear it in terms of industrials and the need to reshore in America. And we're hearing a lot of talk about those as longer term themes going forward. And I think for right now, I think the energy stocks are still cheap. It's really where the earnings power in the market is because of these structural dynamics.
Order submitted.
And so I think that this is still a sector that you can invest in for now. It's been orphaned for quite some time.
Order filled.
But we are seeing that re-engagement trade come back. And John, if I could talk about the strategic midterm reserve for just a minute, I think that the Fed is not the only variable here. I was getting pretty excited, when I was hearing Anne-Marie and Javier talk earlier. But if you think about, kind of something else that's going on in the market right now, those gas prices that were coming down were helping Biden's polling numbers. And so as we've started to see gas prices come back up again, and, with this cut that we've got now, I think that actually does something very important for equity markets in the short term, which is throw some momentum back in the direction of Republicans right now. We've started to see in some of the polling data that the Democrats are not doing as well in the generic congressional ballot. Republicans have perked back up in the Real Clear Politics data. And that tailwind from gas prices coming down that had really helped the Democrats and all these polling and the betting markets in recent months, that seems to be dissipating. And if Republicans do set up for a good midterms, that's going to be good for the equity market in the short term, despite how it complicates the Fed narrative.
Laurie, we're going to talk more about that, no doubt, in weeks to come. Looking forward to doing that with you. Laurie Calvasini there and Brian Weinstein on the strategic midterm reserve. What a phrase. Quite enjoying that, to be honest with you. The S&P 500, energy stocks on that, up more than 12% over the previous 3 days. Year to date, up around about 45%. Coming up in the morning calls and later, crude heading for a fourth day of gains. Wall Street charting the path to triple digits for longer. That conversation with Francisco Blanch of Bank of America coming up very, very shortly. Looking forward to that too. From New York City with futures, negative on the S&P 500 through much of this morning. We're down about 1/3 of 1%. The opening bell 7 minutes away.
Big, expensive cities have a lot going for them. But if you live in one, you've probably noticed that these big, expensive cities keep getting more, well, expensive. You could always move away. You might have just started working remotely, so there's really nothing keeping you there. But then again, moving is a hassle. Well, what if someone paid you 10 grand to do it? What if they threw in free office space, a bicycle, or a gym membership? Programs in cities and states around the US are doing exactly that, and they're getting a lot of interest.
We've had over 50,000 applications.
About 90,000 applications.
We've had over 1,800 applicants from all over North America.
So are these nascent programs actually beneficial to their communities and the workers joining them? Or are they little more than flashy advertising campaigns for places looking for an injection of fresh talent?
From New York City.
Here in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
story. How are you thinking about those dynamics?
About 5 minutes away from the up and about. Good morning to you. Futures just about negative, down 0.4% on the S&P. On the Nasdaq, we're down about 1/3 of 1%. That's the price action. Here are some morning calls. 3 of them. Your first one from JP Morgan, upgrading Credit Suisse to neutral, saying the company is worth at least $15 billion US, more than the market is currently pricing. That stock is up this morning by more than 3%. Oppenheimer upgrading Verizon to outperform $50 price target, anticipating a gradual return to subscriber growth. That stock is negative just about by 1/10 of 1%. And finally, Piper Sandler raising its Phillips 66 price target to 116, expecting refiners to remain a bright spot heading into Q3 earnings. That stock is negative 1/3 of 1%. Coming up, oil prices surging over the last few days after OPEC's production cut. That conversation coming up next with Bank of America's Francisco Blanch. Looking forward to that. Your opening bout just around the corner with futures down around about 0.4 of 1% on the S&P. We're down 16 points. The opening bout up next.
Target filled.
There's more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
We think that's the next secular shift.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles.
One of the most important things is looking around the corner.
Look for Chief Future Officer on Bloomberg. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers Jobs Day like Bloomberg.
24 seconds away from the opening bow this morning. Good morning, some calm. On the edge of snoozing, just a little bit. Relative to what we have seen, futures down by about 1/3 of 1%. On the Nasdaq, we're down about 1/3 of 1%. Also, on the Russell, the small caps, down about 0.5 of 1%. We'll talk a lot about crude this morning. We'll do that in just a moment with Francisco Blanch of Bank of America after a big rally for the commodity and the energy names as well. Switch to the board and get to the bond market. Yields look a little something like this on a 10-year. Yields up 2 basis points, 377 on a 10-year yield. A week ago, Wednesday, we were through 4%. We come down a little bit. Brian Weinstein earlier this morning from Morgan Stanley talking about leaning in to 4%, and he's done just that. In the FX market, dollar strength back on the table. Euro dollar down 0.5 of 1%, 98.33. Crude down about 1/10 of 1%, 87.65. I think they're cheering for the New York Rangers. Ed Ludlow, I'm told that's ice hockey, right? I know that before anyone writes in. I know that's ice hockey. Never seen the game, but I'm told I should go and watch. Thank you. The S&P 500 opening lower by 1/3 of 1% with some movers. Here's